on the whole, I think things are calm and people are coping okay.
Okay, good. Well, just switching then to the impact on the oil industry. I mean, the price is jumping 10%, Brent up around $80 a barrel in over-the-counter trade. Is this a short-term spike, do you think, or could we really see a sustained rally?
Well, so far, no serious disruption, and obviously we'll see where the markets open on Monday. But, dramatic events, of course, but no real disruption to the oil flows. Tankers are waiting outside Hormuz. Some are crossing into the Gulf, many are not. But that's more of a precaution at the moment. We haven't seen any real attacks on tankers yet. And I think we'll have to wait a few days and see if there are no serious attacks. At some point, tankers will start going into the Gulf again. If there are attacks, if there are mines or drone attacks or something like that, then obviously the shipping industry will have to think again.
Mm-hmm. So you're sounding relatively optimistic that flows will continue through the Strait of Hormuz, with nearly 20% of global oil going through that passage. But what would you say the worst case scenario is, and just how disruptive potentially the current risk environment is?
It could be very serious, of course, yes. If we do see sustained attacks on tankers with mines, small boats, drones, missiles, whatever. We've seen already in the Red Sea that a few attacks and only one or two ships actually sunk was enough to deter most ships from using that line. We've seen a couple of major shipping lines already suspending transit through Hormuz entirely until the situation is clearer. So yes, we could have, theoretically up to 20 million barrels per day or so of oil, 20% of world supplies through Hormuz cut off. There are alternative routes for perhaps 8 million of that or so, but a large part could be cut off, and that would include, I think, as you said, all of the supply from Kuwait, from Iraq, from Qatar, and not just oil, but liquefied natural gas. 16% of the world's LNG goes through the strait as well, and that would certainly be very serious if that was interrupted. Yeah,
well, absolutely. Yeah, important to emphasise the LNG aspect of this as well. And which countries are most affected by this potential blockage of oil and gas? And is the United States perhaps shielded to some extent by its own supply of oil and gas?
Well, in the case of oil, if oil supply is reduced and cut off, then the price goes up for everybody. So, yes, the US is a big producer and exporter, so the US as a whole will do okay, and in that case may even benefit as a whole. But ordinary Americans would be hurt. Certainly, prices would go up a lot, and the same goes for any big oil importing country. The same would go for Europe, would go for Japan, would go for China and India. If you look at the raw numbers, of course, China, India, other Asian countries take most of the oil from the Gulf. But that doesn't help too much if prices generally are going up. And if you speak gas, Europe gets not too much of its LNG from the Gulf, but again, if there's a shortage and prices go up, generally Europe is particularly vulnerable.
Mm-hmm. Very early to say, of course, but could this crisis potentially accelerate the push towards energy diversification and renewables, or would it reinforce reliance on fossil fuel?
I think absolutely this will encourage everybody to look at alternatives. I think it shows the wisdom of the Chinese in developing their electric vehicle industry and in building up stocks of oil as well. The Chinese spent all last year accumulating oil in storage precisely for a crisis just like this one. But absolutely it will, of course, encourage countries to turn to electric vehicles more aggressively, to turn to renewable energy to replace gas, absolutely.